Adobe stock has fallen by 48% from its all-time high, while the revenue has grown at a 10-year annualized rate of 16.2%. And better still, Adobe is trading at a trailing PE ratio of just 22.5, which is a significant discount compared to their 5-year average PE of 42.7. But is the market mispricing Adobe stock, or are there valid risks worth avoiding? Today's video will be an in-depth analysis of Adobe stock, covering business operations, fundamental, and technical analysis. Adobe is a multinational software company headquartered in California. The primary way Adobe earns revenue is through subscription services, which makes up 95% of revenue. With Adobe's various subscription services, customers gain access to these applications, with some of the most notable being Acrobat Pro, Premiere Pro, and Photoshop. Many of these tools are used for some sort of digital media creation, which leads us to one of their business segments called digital media, which makes up the majority of Adobe's business, coming in at 74% of revenue, while the other main business segment, digital experience, makes up 25% of revenue, which provides software products and services to businesses for objectives like content management, data and analytics, and workflow management. By geography, Adobe's revenue is well diversified, with the majority of the revenue coming from the United States at 53% of revenue, followed by Europe, the Middle East, and Africa at 26% of revenue. And their third largest segment is Asia Pacific at 14% of revenue, while their smallest geographical segment is Other Americas at 6% of revenue. Now let's cover the macro level pros of Adobe's business. The first is that Adobe is growing in each meaningful category of their business each year for the past 2 years, like we see here with digital media as well as digital experience. Or if we looked at their business growth by geography, the same model is true, where each revenue region has grown each year since 2022. So any way you slice their business, it's growing, which makes it all the more interesting that the stock is sold off so dramatically. Another broad advantage for software companies is that they are typically high-margin businesses, which is the case for Adobe as well, with a current operating margin of 37%, which is quite high for any business. And one of the reasons why their margins are so high is their products are digital, which means they don't have to ship goods, which is especially valuable in today's market as they won't be impacted by tariffs. Yet another benefit to Adobe's business is that they sell their subscriptions in groups of applications. And once a customer uses more than one of these applications and saves all of their projects to the Adobe Cloud, they're unlikely to switch from Adobe's suite of apps due to increased switching costs associated with finding alternatives to each of these applications and losing their saved work. This bundling of services is a common tactic in subscription services and is one reason why Adobe subscriptions are so sticky and difficult to replace, which leads me to one of the most prominent and glaring positives about Adobe's business, which is that their revenue is recurring since their products are only offered as a subscription service. Adobe is proving to be an amazing business, but there are a few risks to consider. Possibly the most prominent being competition with AI, like with Adobe Photoshop, for example, which enables digital creators to edit images to a high degree of quality. And AI software like Luminar Neo is attempting to replace Photoshop, and maybe in time one of these AI services will offer higher quality at a lower price than Photoshop. But as I mentioned before, Adobe sells their software in suites of products, which protects them from individual product competition. But Adobe faces competition on all product fronts from many AI and software companies, like Figma AI, for example, a company which Adobe was in the process of buying, but the acquisition fell through. And I imagine Figma is now Adobe's competition. But Adobe isn't a stagnant company, just sitting idle while competitors make better products. They too are innovating their current tools. And one way we can observe this is through their research and development budget, which is huge, currently at $3.9 billion, or 18% of revenue. This R&D budget is probably why some of Adobe's products like Premiere Pro are considered best in class. The last con to Adobe's business is that people seem to really dislike having to pay for a subscription to Adobe software, an idea which is captured well by these thumbnails. I think any savvy consumer is always attempting to reduce recurring costs in their life, and in our ever-developing technological world, I think this is becoming easier to do as more and more free creative tools arise. Although many of the alternatives to Adobe are probably only temporarily free and will ultimately become paid products. Now let's get into the foundation of the business, starting with revenue. Adobe's revenue has grown phenomenally over the decade, every single year, growing from just $4.8 billion in 2015 to $21.5 billion as of 2024, giving Adobe an annualized growth rate of 16.2% over the decade. Although their revenue growth has slowed in recent years, from a mind-boggling level around 24% to a current level of 11%, which is still quite impressive. And if we look closer at the revenue by quarter, they are still growing consistently and rapidly each quarter. If we look at their free cash flow per share growth, it's even better, having a mind-blowing 10-year annualized growth rate of 21.2%, which again is incredible. Better still, Adobe is buying back shares at a rapid pace, with a share reduction of 3.8% from 2024 to the trailing 12 months, and a 10-year annualized share count reduction of 1.2%. So Adobe is growing rapidly and increasing shareholder value, but what about their liabilities? They have a current total liabilities level of $17 billion, and if we add back their cash on hand of $5.9 billion, their true liability level is at $11 billion, which is only 1.6 times their trailing 12 months net income, which is just incredible considering the stock is so beaten down. In terms of valuation, Adobe is currently trading at a massive discount compared to its own history, at a trailing price to cash flow of just 15.4, which is a 50% discount compared to their 5-year average price to cash flow of 30.6. Or if we use the trailing PE ratio currently at 22.5 compared to Adobe's peer group using the technology ETF VGT at a PE ratio of 39, Adobe looks to be trading at a significant value. One final way we could value Adobe while accounting for their fast earnings growth rate is by using the PEG ratio, which again indicates serious value to be had at a PEG ratio of just 0.63. Here we see a 5-year price chart for Adobe, and the first aspect to notice is that the price trend is down, which indicates misalignment with their earnings growth over the same period, which is my first indication of value. Next, the standard deviation channel shown here with these yellow channel lines shows that Adobe is relatively discounted compared to its own 5-year average price, indicated with this center yellow line, while the current price is below average. But if we jump to a 10-year chart, the clarity of direction and degree of discount improves, and we can see that Adobe is trading at a discount not just on a 5-year time frame, but over a 10-year time frame as well, with the current price at $360, which is a massive discount compared to the average price, currently at $569, meaning the current price is 37% below the average price. In terms of support and resistance, price looks to be respecting and is holding this price level at about $330, and is headed into short-term resistance at $373. Lastly, we have the Relative Strength Index, or RSI, graphed at the bottom of the chart, which again shows current value and potential for upside, with the white line being at the bottom of the channel. And even better, it's near a 10-year low. That's all for today's video. Full disclosure, I own Adobe stock as of the publishing of this video.
I'm not a financial advisor, and this is not financial advice. This is for educational and entertainment purposes.